All right, let's dive right in. Today, we're talking about a tool that is, no joke, the financial heartbeat of pretty much any business out there, the cash book. Think of it as the daily diary that tracks every single cent.
I mean, seriously, think about it. In any business, cash is constantly moving. So how on earth do you keep a perfect up-to-the-second record of every dollar in and every dollar out? Well, that's exactly the problem the cash book was designed to solve.
So here's how we're going to break it all down. We'll start with the absolute basics, what a cash book even is. Then we're going to build on that, from the simplest version to the industry standard. We'll even get into a pretty cool accounting move called a contra entry before we wrap up by talking about why all this detail is so important. So, first things first, what is a cash book? The best way to think about it is as the command center for all your cash. Every single cash transaction, this is where it's managed. Okay, here's the textbook definition, and it actually reveals the cash book's secret superpower. It's both a journal and a ledger. Now, what does that mean? It means it doesn't just list what happened, it also summarizes it, all in one place. It makes the whole accounting process way more efficient. So why do we even have it? Well, yeah, of course, it records all your cash coming in and going out, but the real magic is that it gives you a live, instant look at your cash and bank balances. This isn't just about writing things down. It's about control. It's about having the power to make smart financial decisions right in the moment. Okay, let's build this thing from the ground up. We're going to start with the most basic version there is, the simple, or as it's often called, the single column cash book. Now, this version is just perfect for smaller businesses, ones that deal mostly in actual physical cash. It is so straightforward. You've got the date, what the transaction was for, and then just one single column for the amount. Money in is positive, money out is negative. Clean, simple, and it gets the job done. But, businesses grow and things get a little more complex. What happens when you start offering discounts to your customers, or maybe you get discounts from your suppliers? Well, that brings us to our first level up. See what we did there? We just added a discount column. Now a business can track all the discounts they give out and all the ones they get right next to the cash itself. This is great because it keeps that cash column pure. Only actual cash moves there, while still keeping a record of these other important parts of the transaction. Okay, so we've handled cash and we've handled discounts. But let's be real. In today's world, most money flows through a bank account, right? And that takes us to the complete cash book, the version you are absolutely going to see out in the real world. And here it is, the triple column cash book. This is the whole shebang. With just one entry, you can now record a transaction that involves a discount, physical cash, or the bank. So paying a supplier with a check, that goes in the bank column. Making a cash sale, that goes in the cash column. This thing really does become your true financial command center. All right, now for a pro-level move. What happens when you're not paying someone else and you're not getting money from a customer, but you're just moving money between your own accounts? This needs a special kind of entry. It's called a contra entry. Basically, it's any transaction that hits both your cash and your bank account at the exact same time. The key thing to remember here is that no new money has entered or left the business. You're simply moving it from one of your pockets to another. So let's look at the two classic examples. Let's say you pull cash out of the bank. Well, your cash on hand goes up, but your bank balance goes down. And if you deposit cash into the bank, the exact opposite happens. See? They're perfect mirror images of each other. It's a zero-sum game within the business. Okay, let's walk through this example. We're depositing $50,000 into the bank. Now notice how the transaction is recorded on both sides of the book. The bank column goes up by $50,000 and the cash column goes down by $50,000. And see that little letter C there? That's the secret code. It tells any accountant looking at this, hey, this is a contra entry. Don't post it anywhere else. So we've gone through all the mechanics. But why do we have to be so careful with all this? Why does this level of detail matter so much? Because, frankly, getting it wrong can lead to some really serious and very costly mistakes. Here are 3 huge pitfalls you've got to avoid. First, treating a contra entry like a payment will totally wreck your balances. Second, remember how the cash book is already a ledger for cash and bank? Well, posting those balances again is a classic double counting error. And finally, and this is a huge no-no, mixing your personal cash with the business's cash. Just don't do it. Keep them separate. At the end of the day, a well-kept cash book is so much more than just a record.
It gives you a true, real-time picture of your company's liquidity, its ability to pay its bills. It's a direct window into the financial health of your business. And that is an incredibly powerful tool. And that, of course, brings us to the final big question. Let's say you've done everything right. Your cash book is a work of art, a masterpiece of accuracy. But does it actually match what your bank statement says at the end of the month? That little mystery and how to solve it is exactly what we'll tackle next time.